Well, what a week that was. Interest rate decisions from the Federal Reserve, European Central Bank and the Bank of England sent the markets into a frenzy. On top of all of that, there was non-farm payrolls and mega tech earnings as well. It really was one for the ages. Has this now kicked off the real volatility theme for 2023? Hello, I'm Connor Woods, market analyst at ForexSignals and howtotrade.com. Here is our weekly preview for the 6th to the 10th of February 2023. Now, stocks have been exploding to the upside recently, and the question being floated around is whether the bull market is back. Whether you believe it or not, there is certainly excitement in the markets right now, and that excitement creates opportunity. The event of the week is likely to be on Tuesday when we hear from Jerome Powell after his fascinating market-moving press conference. The central bank action is not finished yet either, with the Reserve Bank of Australia next in line. Furthermore, expect volatility in the UK on Friday when the GDP data is released. Now let's explore the best opportunities this week with our expert analyst in the States, Shane Vernier.
Hello everyone, welcome back to the Trading Lab. We're going to go over the first full trading week of February. We're going to show you a few of the key markets and the key technicals we'll be watching, and also highlight a few of those big time events, big market moving events for the coming 5 days on the market. Now, Monday starts off with a muted economic calendar. We have a few PMI figures, one out of the UK and one out of Canada. The IV PMI out of Canada, released during the US pre-market, should bring a little bit of participation to the loonie. Now, as far as our key market for the day, you're going to be looking at this dollar CAD, and it's sort of been in deep rotation for quite some time now. We had a fantastic bullish run back in August and September of 2022. Since then, it's just sort of come back in real measured fashion. So right now, I'm looking at some technicals. We had a big time rotation zone between 135 and 133.50. We finally broke beneath that last week. If we do see a continuation to the downside, a nice area around 132 may be a fantastic buy. So for Monday, muted economic calendar, we'll be watching the loonie closely. Now on Tuesday, a bit more active. The session kicks off in the Asia Pacific, and we're going to be looking in depth at the RBA's interest rate decision. Now, last week, the powers that be, the Fed, the BOE, the ECB, they all got involved, and they all raised rates, tightened that policy. Well, Australia is going to be an interesting case study. Right now, the RBA has the prime rate right around 3.10%. Now, you had some lagging retail sales, and you also had inflation tick higher down under. So what does that mean for the RBA's interest rate decision? Most analysts believe that you're still going to see a rate hike there. However, don't be surprised if we hold rates static. I don't believe a cut's in the cards, but we may just see the RBA just hold serve on this meeting. So what could that possibly do to the Aussie? It could drive it 6 ways to Sunday, depending on if we get big surprise or not. So our key market for that Tuesday session is going to be your Aussie Kiwi. And you can see from this is a fantastic wave. We had a real nice spike high back in September of 2022. And then more recently, you had an incredible volatility, a real nice 3 months to be trading, and now we come right back to that 50% retracement level. So for me, instead of focusing on that macro wave, I'm going to want to focus on this last 65 days of trade. And in order to do that, we have to go to our weekly. Now, the biggest thing I want to point out on this weekly chart is we're in heavy rotation. Nice move really to close 2022 and open 2023, and now we're just sort of chopping sideways. So big picture, what could we be looking for potentially? Well, we could be looking for a macro level, maybe a pullback buy on the last 3 weeks range. I think that's certainly not a bad play, and you'll also see that we have a weekly moving average right down in this vicinity. So somewhere around 108.33, 62% might be a nice support area that we'll certainly be looking at later on in the week. So I'll be watching this Aussie Kiwi very closely. We're looking for a deep retracement off of last week's high, right back into really the heart of January's range. So that's a decent technical approach for that Aussie Kiwi on Tuesday. On to Wednesday. Now, Wednesday is usually one of my most fun days of the week, but this one's it's special, and the reason why is the monthly WASDE report. The USDA puts out their World Agricultural Supply and Demand Estimates, the WASDE, and what that is it's a major report on not just corn and wheat and soybeans, but it also talks live cattle. And in these coming reports, we need to be sort of scrutinizing the live cattle scenario and the livestock scenario scenario. And the reason why is these are wintertime readings. The reports that you're going to get are going to start dealing with things like herd strength and winter kill. We're in the heart of the North American winter season right now, and it's important to start measuring and projecting what our herd strengths may be. A lot of the northern states, the calves, January and February. Typically, you don't shoot for January calves, but February certainly is a season that many farmers target many cattlemen target for their newborns to expand that herd with new calves. So we're going to be watching the winter kill statistics very closely. I think it should be an interesting report. We'll also see everything on corn and wheat. This is a good look at your live cattle futures market, and you'll notice this is a weekly chart, and last week you really had a bullish breakout. So is that in anticipation of this Wednesday's WASD? I don't believe so, but what it is it is showing that the price of beef is headed north. So this is a live cattle futures contract on the CME, and you can see we had a real tight period of compression going back to December, a little bit of a retracement, and then a robust rally of almost 2%. So if I was looking to trade this, you definitely are going to want to dial this down to a daily perhaps and just check the market structure. Perhaps you could get a nice retracement maybe from this zone to this zone. I would be looking at a prime level, probably at a big round number. 162.5 is a pretty darn good level. So I would base this retracement zone off of last week's high and then just base a pullback on my daily going back to Wednesday. Wednesday, the 1st of February's spike low, so somewhere down around 162.50 could be a nice play for live cattle futures. We're going to be keeping an eye on the winter kill statistics, and that's going to be sort of a big portion of that WASD report. Now, Thursday is going to be an interesting day. We're going to stick with the commodities theme. Every week, the EIA puts out their underground natural gas storage report, and recently, natural gas has been in an absolute tailspin, which it sort of defies all logic from a fundamental perspective because you have the Russia-Ukraine strife, and you also have the heart of the North American winter. So what we have here is just it's almost inexplicable. But the natural gas pricing going back to last August has absolutely crashed. Now, full disclosure, this is one of those markets that has given me one of the hardest times, one of the most difficult times to trade, at least through probably since October of 2022. We were expecting a big run up, and we didn't necessarily get it. We actually got the opposite. We were looking for 10s and 11s, and now we're back down to 2.5. So natural gas is one of the most fickle markets I've ever seen. If I'm breaking down the technical outlook for gas, this is what I'm targeting on. It's very simple analysis, but it's very true right there. You've got pre-war levels going back to February of 2021. We had the big spike in October, and then the pullback, and then the explosion when the Russia-Ukraine situation unfolded. Since then, we've seen a major pullback in gas, and you'll notice we're back there pre-war levels. So if, in fact, this market's going to base, my guess is it's going to base it around this value area, somewhere around 2.25 potentially is being the bottom of this range, and you'll see we are well on our way to doing just that. So this would be a traditional play where you're looking just for a value area or an area where we've traded, done a lot of business, and down right around 2, I would say 2.25 is probably going to be the downside of that range. Now, lastly, we're going to close the week on Friday's trade. With UK GDP. Now, we talked a little bit about the manufacturing PMIs from the Monday session, but UK GDP is going to be important. It's going to be important for a few reasons. Number one, the world really is hyper-focused on this recession narrative. We don't really know, which countries are pulling back, which countries are going to face a greater road back to economic growth, and maybe potentially be stuck in a recession longer than others. And the UK has been on the top of everyone's list as being an area where that economic pressure, it was going to be palpable. So these UK GDP figures for Q4 are projected to fall. They're looking for Q4 to fall. We will see if that in fact occurs. We imagine that the estimates are probably fairly correct, but we're looking for a positive GDP number here to really drive participation. So a lot of the central bankers last week, remember, they were positive about inflation. Yes, it's coming down. There's still work to do, but we're seeing signs that we're entering a disinflationary cycle. That means that the policy can get back to normal sooner rather than later, and that in turn could drive growth projections, not necessarily for Q1 2023, but maybe for Q3 and Q4. So we're looking down the line a little bit, but either way, it should bring a little bit of a participation to the pound. So the first thing that I would focus on is just a couple of Fibonacci sequences right here off of that low, that September 2022 low, right up to this double top that we've looked at a lot on our live streams. Double top right up around 120, let's see, 124.50. So the big thing we want to look at here is, okay, of course we would love a pullback in a perfect world. I don't know that we get that, and I think that a better way to look at this market, at least for a more actionable trade idea, or perhaps a salient trading plan, something that makes a little bit of sense to us, you need to notice that double top. That's the single biggest technical occurrence on this chart in this market, this double top on December and January, and they both occurred right beneath that 62% level of January, of 2022's range. So December, January double top, 2022's range, 62%. This is a key zone. If we do get that extension above this zone at some point this week, at some point ahead of Friday, we could be looking at buying pullbacks from this zone. If this area does hold, if this monthly double top does hold, then we could be headed further south. So that's a quick technical outlook on the pound. If we do get a deep enough pullback, we'll talk about all the different ways that we can enter this market to the long side in our daily live streams. So that's it from here. Back to you, Connor.
Thank you, Shane. Yes, last week was fun, but this week important data will be hitting our screens once again. And with the market buzz back, expect fireworks. As always, our team of analysts will help guide you through these opportunities every single day in the trading room, ensuring a high quality service. We'll help you make the most informed trading decisions and, of course, be with you every step of the way. Until then, trade well, and we'll see you on our next live stream.